Welcome to the REI Foundation podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
Well, hello again. Welcome to another edition of the Real Estate Investing Foundation podcast with Jason and Peely. You are again just stuck with Jason because Peely's out there making it happen and also taking 3 kids out there with her. So today we are super excited. We have a great show. If you want to talk multifamily syndication in all different aspects, well, today is your show because we have Sterling White on the program. Sterling, how are you?
All right, let's bring it.
There we go.
Thanks for the intro.
Good. Well, a little bit more about Sterling. Sterling's an investor and business owner on a mission to make the world a better place through principled and efficient real estate investment. And before he did transition to multifamily, Sterling's already been involved in purchasing and selling over 100 single-family properties. And today he focuses purchasing income producing multifamily properties by scaling his 300-plus unit portfolio across the nation through the company he co-founded, Holdfolio. And the success of Holdfolio's technology gave birth to SyndicationPro. We'll touch on that today, a fast-growing all-in-one software solution empowering investors to efficiently and easily raise capital online. So Sterling, thank you so much for coming on. We really appreciate all of this that you're going to bring to the show today. But before we can jump into that, how did you get started?
Gosh, we can go all the way back to the elementary days. So we can start there. I've always had the entrepreneurship bug. So growing up in the not so good parts of the city where didn't lower income, so we didn't have enough money to basically buy the things that I wanted in a way, which just had enough to cover the rent. So I had to figure out a way ultimately to get those things. So that's where the whole entrepreneurship spirit kind of engraved in me. Elementary, anything I could get my hands on, I would sell, starting with Kool-Aid. That was my very first product. And then it was Pokemon cards, and then it just kind of grew from there. But how I got started into real estate was I just fell into it, I guess, going into the spiritual side. But don't want to go into that, is the universe ultimately. And yeah, it was on the construction and get my hands dirty with the bricklaying and assisting on that, and wanted to really get more into the investing side. And that's when I met a mentor, and then kind of just everything snowballed from there. Had all these single families and made the shift to multifamily just over the past couple of years.
Wow, there's a lot we can dig into there. So
yeah,
let's touch. You start being a bricklayer, and lots of times when you start that process and you start just working, you never stop. So what was it that allowed you to say, okay, I'm doing the work. Okay, I get this, but I need to find other vehicles that can provide me income, so I'm not that out there working with my hands every day.
Gosh, I would say that was definitely a grind working in that specific sector. It's quite a bit, but also I was all getting into the self-development and also reading books about, hey, where do you ultimately build the long-term wealth and also sustainability? And that's where the whole investing side came, the cash flow, saw all the benefits, read Rich Dad, Poor Dad. And then he talks a lot about real estate as well. So that's kind of where the doors open that, hey, I like the construction side. Well, not so much liked it, but let me make this shift over to more of being an investor.
And you jump in, you start buying homes. And what you really mentioned in there is that before you did that, you found a mentor that could help guide you along your path. Do you remember how you came upon that mentor and if you were searching it or it just happened?
That's another interesting thing about the universe, but it kind of just worked itself out. This mentor was actually at a CrossFit gym of mine, and I always overheard him over discussions about he was doing development of historical multifamily, but looking to further diversify himself from multifamily to single family. And I said, hey, what could I help you with in your business? What need? I am willing to work for you for free. And that's one thing that a lot of people thought I was crazy for doing that. But, oh gosh, what I learned, I was able to compact 20 plus years of that person's experience into about 2.5 years for myself working with them.
Wow. And that's right. When you put your mind just to work and you say, I want to do something, you start it's like when you want to go buy a car, right? And all of a sudden you find that car, and all of a sudden all around you see that car everywhere, but you start focusing on it, right?
What is it? The reticular activation system.
That's right. That's
yes.
right. Exactly right. And so you jump in, you start really growing, and you take everything that person. And the good part about this is you find a good mentor who's out there doing it. It helps you not only learn the process, but avoid all the pitfalls that others have taken.
Exactly.
And almost leapfrog yourself into this environment where you can jump into something and just really start to excel because you've seen, okay, well, I get it. I don't have to learn the hard way. I don't have to go out there and make 1,000 mistakes, even though we still do as we grow. But on that fact, I mean, that's awesome. And you jump into single family homes. Was there a moment when you said, okay, that's good enough. Let's go the multifamily route?
I would say when we were both my partner and I, so that mentor was my first partner, but I ended up outgrowing that relationship and found my current. And we owned just a little under 150 single families, and we had all this management. Those are very labor intensive on the management side. And so at that time we said, okay, how do we really scale things efficiently, and where do we want to go as far as our goals? Do we want to own 1,000 single families in the next 2-3 years, or the multifamily side? So purchase 46 unit, and things really just clicked from that point on.
So let's talk about that first purchase. How'd you find it? Tell us a little bit more about how you put it together and how'd you make it happen?
So this is all off market. I love off market, direct to the owner. One thing I would really mention to everyone is, even though when you're in buying mode, you're still in sell mode. And that means selling yourself. So this specific individual, I ended up driving the property, saw that it needed work, and pulled public record and basically skip trace the LLC that was the owner of that asset, and called them up, and we started the dialogue from then on. Luckily, they were motivated because this was their last property out of all their multifamily holdings.
So you found a property, it has distress. You go into public records, find the LLC and skip trace the LLC, and pick up the phone and call the individual. And what do you say?
Hey, I have the track record in terms of I purchased these single family. So you have to sell yourself to that specific seller, why they should sell to you. So that was one thing. And it was, hey, very interested in purchasing your apartment community. We're able to close in less than 90 days. Would you consider on selling? So that's kind of how it went. But luckily, that person was just in the state where, yeah, I'm ready to sell.
Now, let's talk in a high level for people that maybe haven't analyzed multifamily property. So you have that conversation. What do you ask for from the owner so you can make them a reasonable or the right offer?
Yeah, so this person actually had the property listed, I think it was years ago, and things didn't work out so well. So one thing that they mentioned initially was, hey, I need you guys to put down $200,000 money hard day one in order for me to talk to you. So that's one thing we had to overcome, and we were able to get that. And then secondly, what was your other question? What was your first question?
Yeah, so once you were able to put the money down hard, what documents or what did you ask from them so you could go there and make them a viable offer?
Gotcha. So we needed a updated rent roll, the most current, and then also T12, which is the trailing 12 financials associated with the property, profit and a loss. And then from that standpoint, we did the underwriting and said, okay, we're willing to purchase this at, let's say, an 8 cap. Okay, this is what it looks like based upon the actuals.
So you buy this complex, and now was Holdfolio in the works when you had the single family homes, or did that come from building up the multifamily business?
It was the Holdfolio, the single families. So we leveraged all of that, the management, our investors that we also had partner with us on those deals that we transitioned to we had that to transition to multifamily.
And so now today, as you're growing your multifamily business, you're in Indianapolis, right? And now you're buying in other markets. Beyond just driving the properties and finding properties in distress and in the public records, what other avenues are you using to find off-market properties?
So it's pounding the phones. So that's one mechanism, but it's about being creative in your follow-up. So there's personal visits, let's say the person, you're just not able to get in touch with them after 4 or 5 times, or maybe they're not interested. On the multifamily side, I say it's more of a long term, and there's longer cycles in terms of the buying process and also the sales process, I would say, in a way. So it's the cold call, there's the personal visits, and also incorporating direct mail campaigns too is very powerful.
That's great. And you've grown from 0 to 300 units in 3 years. Now, is this excluding the single family homes?
I would say we're just a little under 400, including the single family homes. On the multifamily, 249 or 250 is where we're at. And that's in less than 2 years.
So you have the 46 unit. What does the next deal look like?
The next deal was we jumped up to a 50 unit.
Awesome.
And then an 80 unit after that, and then another 80 unit.
And you're using syndication to buy all these properties, correct?
Just my own cash.
No, I'm kidding. Yeah, that's it. Yeah, Bro's actually giving us all the money to buy ours too. So we're good on that fact. So anybody who wants the money to go buy apartment buildings, we'll get Sterling's phone number after. Text him, call him.
No, please don't do that.
No. But yes, so we're all using syndication out there so we can all grow from the economies of scale. If you've been able to grow a great investor network based on track records and others, talk to us about how you're continuing to grow your investor platform.
Yeah, so it's doing things such as this, connecting with like-minded individuals who are influencers in the industry and being of value. So it's all about reverse engineering, finding out who your ideal investor is, and determining where their eyeballs are and also where their ears. And then you want to position yourself to be of value. So that is leveraging sites such as Bigger Pockets, where I'm a blog contributor, podcasts, and there's also networking events, and friends and family. If you provide excellent returns to someone, then they're going to recommend you to everyone else. So that's a very powerful one, that last one too.
Now, with your syndications today, is your focus a long-term hold, or what's the focus of your buy and holds?
So buy and hold until we die.
Great. Great. Now, with that talk track with investors, typically they want their money back at some time, right? So how do you have that talk track that makes it so they can understand why you want to keep the properties for such a duration?
Yeah, and that's one thing I would mention to everyone, is to ensure that the investors that you're bringing on, the interests are aligned. So one thing that we do is we have a phone call with everyone who signs up to invest alongside us. And that is a very transparent conversation to determine what their goals are. So it's qualifying questions. If someone says they're looking to get in, get out, then that's not an ideal partner for us. But outside of that, we mentioned, hey, we're buy and hold for the long term to achieve really those tax benefits. And then that's when we kind of go from there. We do have a horizon 5 to 7 years. This is when, because that's basically how you want to calculate your IRR, internal rate of return. So we'll say, okay, this is what it'll look like in that time period if we were to sell, or a refinance, which we're more leaning towards refinance on our deals.
Oh, that's amazing. And we're under the same mindset, right? It's all great to get the property, and then people want to look at the sale, but there's so many advantages to be able to hold for the long term. Now, with your businesses growing so quickly, what's something you're working on right now to just, what's the growing pains that you're focusing on right now, and how are you overcoming it?
I'd say the management side is always tough, especially if you're doing in-house management. As you scale and put on more units, you just have to find the right people to be on your team. So you as an operator is not in the trenches making all these decisions. So for us, one really good hire we recently made was a chief operating officer who has extensive experience in terms of the property management side. So now everything goes up to her, versus previously everything was going up to my partner and I. So that's one thing, is having the right team. And so that was a growing pain, is the scale side. And then also another pain is the market is getting very tight across the country. So we're having to expand to other markets in order to find deals to where the numbers work and there's cash flow.
So looking at markets that you're focusing on today, what stands out to you? Say, okay, we're going to go into that market. What metrics are you looking for?
Yeah, so we like to see economics on the high level. Are there large corporations that are doing business there? Is it business friendly, specifically going more niche? Is it landlord tenant friendly? Is it more tenant friendly? Like some places like Chicago where it could be up to 6 months for the eviction? Or is it more like Indianapolis or Louisville, Kentucky, where it's up to about 30 days is the latest? So those are the things. And then also, is it the population growing or is it on a decline? So those are the parameters. And then we go niche into the neighborhood to determine what's the crime and then all those other criteria.
So as you continue to expand here, what's the focus now over the next 3 to 5 years of your company?
That is a great question. So I take it more of a year by year. Next year, we're just solely on the multifamily side, wanting to bring on 500 additional units. And really, we want to scale because right now our niche has been between about 50 to 150 units. We would want to go bigger, but of course, the bigger you go with the multifamily, the more sophisticated. And a lot of those more sophisticated operators aren't going the off-market route.
Yeah, especially right now. And you're using third-party management for people out there who are trying to find a good property manager. They handle their properties. What's something you look at from a property management standpoint?
Gosh, that is something we just recently did too with that apartment in Louisville. Is we brought on a third-party property management company. First is we do an initial screening of what their cost would be to turn a specific unit, for instance. So if they're saying for specific flooring, it's going to be, because we know our costs since we've done it so many times. But if they give us an overinflated price from the get-go, then that's one, we would say a red flag that they're going to be overcharging us on really nickel and diming us. And then also we're looking for referrals. So one thing, once we expanded to the Louisville market, myself, when I was doing the digging on all of these apartments, I saw that one company was the one that was managing and then was able to get referrals from other investors that, okay, this is a good property management company. Referrals is huge.
Absolutely. And is there a point or a growth period where you would now bring back in all of your property management?
I would say that is a great question. And that's a great question. I would say the 80 unit at some point in time, we would want to bring that on as soon as possible in a way in terms of in-house and self-managing that. But in terms of scale, if we had multiple 100 units, then from the get-go, we would have self-managed that. But smaller than that, we third party.
So let's take this one step further. Let's talk, because you have both sides. People who like to manage their properties and people who are just no way. I don't want anything to do with it. It's not my wheelhouse. So let's talk to why you would want to bring that in. What are the advantages of holding property management in-house?
Yeah, so the biggest advantages, of course, is no one's going to manage your property like you're going to manage your property. And hopefully you are a good operator, because some people do say that, but they're terrible managers. So that's one thing you also got to be self-aware about. And I would say that's it. And then the interests are more aligned. So you know what, especially if you have a track record, you know what your costs are going to be, and you have more control over that element too. As more times when you're doing third party, is they may be a little bit more incentivized because they've got all these other properties that I've got to manage. So I think it just comes overall to the more control.
Yeah, I love that. It's great focus, right? I mean, it's a solid point. You're never going to get the management from others as you want your property to be perceived and act. But you got to make sure you're a good operator.
Yeah, exactly. That's what
If you're not a good operator, then that whole thing is, you better just source it out to a third party and then listen to what about 3 minutes ago when he was telling you how to find the right property manager. But with that said, as you're growing this out, what's your big why for doing all this?
Oh gosh, I don't want to get all teary-eyed or anything, but it's my daughter is a big why. She's my little angel. She's 6 going on 13. Parents who are listening in would know exactly what I mean. And I would say the environment that I was in too is a huge driver. Lower income, crime. I could have went this direction, but I ended up going this direction. So I want to be the ideal for people that are there that, hey, you don't have to go this route, which is what a lot of those individuals tend to do, that I'm an ideal that you can go this way and still be of success. And I have a blueprint for you. And then it's just another driver is we're not going to be on this earth too much. So might as well just live it the best I can.
Sure.
And that's doing big things.
That's right. That's right. So if we have a person who's listening today that maybe hasn't gotten started yet, maybe they're in that point where they're stuck in an environment, they're out there doing a construction job, or they can't get over the hurdle. What's an actionable step they can take right now to start their real estate journey?
Gosh, I would say, man, biggerpockets.com. I would say go on there and create a profile. It's completely free. And just research ultimately. Because first, trying to think. Because you have to basically become self-aware, which I would say I would recommend reading all the various models, buy and hold, fix and flipping. And then from that route, then just pick one of those avenues and just go all in on it.
So if you know what you knew today, would you have started with the single families or jumped right into multifamily?
Knowing what I know today, man, I haven't heard that one before. That's a great one. Because I would say the single family ultimately was able to give me not only the confidence, but also, again, the track record to jump into the multifamily. But now that I'm in multifamily, I would, that's a great one. Jump in multifamily, I would say.
Good.
Well,
go big.
But Yeah, go big. But for those of you who are not as ambitious or don't want to go as big, then starting with single family is completely fine. If you want to have a small portfolio and then you can live off that, then go that route. But depending on where you want to go.
Sure, your needs in mind. And let's talk a little bit about your self-growth. Do you have a morning routine? And if so, what is it?
Yeah, so one is I wake up, and also before I go to sleep, I write my goals out. That's one thing I do. And then also I really, it's more on the drives. I just think, I just have a gratitude moments, and that's of all the things that I'm grateful for. A healthy daughter, I'm healthy, got a great team around me. And that really puts things in perspective of, hey, Sterling, I know things are life is about the ups and downs, but ultimately you should be grateful, or you be grateful, but also know that there's bigger and better things that you can go for or are going for.
So you've given us a lot of this, but I'll ask if there's anything that stands out that are some words you live by.
I would say it's by an old gentleman by the name of Earl Nightingale, which is, we become what we think about. Love that. And what you think about, exactly what it is. That quote, that's been my favorite. I would say he, in terms of my mindset, really shaped who I am today, because that's when I was making that transition to be a little bit lost in life, started getting on his recordings, which these are super old. These were CDs. And I listened to it so many times it started to scratch. But that really helped, is investing in yourself, because you are a sure bet, instead of all the cars and things, material things that you don't get a ROI, they depreciate over time.
That's amazing. And thank you for that. And Sterling, we celebrate all your successes. This has been a ton of fun. I've learned a ton. I'm going to go out there and start just pulling some public records, start hitting the phones myself there, because I got to keep up with Mr. Sterling White. This is amazing, Sterling. Thank you so much for your time today.
No, thank you.
Want to reach out, hear more about what you're doing from a syndication platform or others, how do we find you?
Yeah, so you can find me at Sterling at syndicationpro.co, not .com, or on Bigger Pockets. And what the millennials like to say, slide into my DM and send me whatever message you have, and I'm more than happy to be of value.
That's incredible, Sterling. Thank you so much for being on the show today. We really appreciate your time.
Thank you.
All right. Have a good day. Bye now.
Thanks for tuning into the REI Foundation podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.